Hello, everybody. Welcome to this week's installment of DappRadar Meets. A big, warm, happy new year to all of you. And I hope you have enjoyed the festive season and that Santa has been kind. As always, we record these sessions for people to catch up later. But if you missed any of the previous sessions from last year, you can catch them on YouTube. Just search for DappRadar on YouTube. It feels like a minute since I've been doing this. Whoosh. After all the hubbub of last year's Radar token launch, it was definitely nice to catch a break over the Christmas time. But it's also great to be back and great to be here with you guys in the community to interview some more projects. So without further ado, I'll go through my spiel. As you all know, some of you don't. Every week we sit down with leading minds behind leading protocols, blockchain games, NFT projects, and DeFi dApps. We really dig in and get a better idea of what's in store for them. And most importantly, we give you a chance to ask all your questions. If you've missed any of the previous ones, don't worry, we've got you. Today, we welcome Max from Money on Chain. Max, are you there? Do a quick check.
I am here. Can you hear me?
I can hear you loud and clear, Max. That's perfect. I'm just going to give you a short introduction and then I'm going to hand over to yourself, okay? So Max is here from Money on Chain, like I say. He's been a Bitcoiner since about 2011 and a bit of a benchmark for the Argentinian Bitcoin community. He's a long-time Bitcoin investor and entrepreneur and a consultant for various projects. Money on Chain is all about bringing Bitcoin into the mainstream, allowing Bitcoin holders to earn rent on their position and gain free leverage. But I'll let Max dig in much further on Money on Chain. So Max, how you doing today, man? You good?
I am good. Thank you.
Cool, man. So I mentioned that you've been a Bitcoiner since 2011. I want to give the audience a bit more of a taste of where you've come from and how you've ended up here doing Money on Chain.
Okay, well, actually, I discovered Bitcoin in 2009. I think it was in a Linux publication. I was searching for parallel processing projects, and I discovered the mining of Bitcoin. So I thought the blockchain invasion is great, but there is nothing backing the Bitcoin, so I move on.
Okay.
Later, in late 2011, I rediscovered Bitcoin because everybody was talking about Silk Road and everything. So I double-click in the idea behind Bitcoin, not just the technology. Well, and I fell in love with Bitcoin. I realized the potential. So I was a few years learning everything I could regarding economics and technology behind Bitcoin. And I think it was like 2014. The idea of a stablecoin that uses Bitcoin as collateral came up after the success of Tether. I immediately realized the problems with Tether, the problems with the centralization, the problems with the money in a bank account that can be seized, or the bank can go bankrupt, or a government can seize the funds. So I start working in the idea of a decentralized stablecoin that uses Bitcoin as collateral, but the technology wasn't ready. There was a project called Rostock, now it is called RSK, that it was trying to implement a smart contract on Bitcoin. So I said that I will wait until RSK is ready, and when RSK is ready, I will start working on this. So as soon as RSK launched his first beta, I call Manuel, he's the other founder, and we start working on Money on Chain. We deploy the project on December 2019, and now we are here.
Okay, so 2014 was the real sort of epiphany moment when RSK kind of came along and enabled you to actually realize the idea that you had, right? And
Exactly.
just to touch on it a little bit, Max, because there might be people out there that don't know the fundamental differences between Bitcoin and Ethereum. regarding smart contract technology. Do you want to just outline that very quickly? Like, what's the key difference here? Because a lot of people do ask me, you know, how come you don't have dApps running on Bitcoin? So do you want to just explain that quickly, like the fundamentals behind that?
Well, there is.
Or I can if you want.
The first thing that you have to understand is that when you have a blockchain with smart contract, the attack surface is bigger. So it's true that your bitcoins are safer in layer one than in another blockchain running a smart contract. I want to be clear in this because when people talk about the bitcoins in layer one are safer,
Yeah.
you immediately start thinking about, oh, so my bitcoins in layer two are not safe. Well, actually, your bitcoins in layer two are safe also. We are talking about orders of magnitude, like saying the center of the galaxy is far away from Alpha Centauri. But Alpha Centauri is far enough so we cannot reach there. So yes, the bitcoins in layer one are safer than in layer two, and it's much smarter to develop or implement smart contract in a different chain. Not only smart contract, you could have another side chains. For example, you could have a side chain with I don't know, confidential transaction, and another side chain that implements another functionality, and you will still have the full robustness and security of layer one, and you can move from layer one to another layer depending on what you want.
Okay, thank you very much for outlining that. I also think it's important to put that piece of information first, because when people use the word safety and safe, it can be misinterpreted sometimes. So yeah, thank you for that, Max. Really good. The next thing I want to do with you, it's something I do with all the guests, and it's called the elevator pitch. And what I want you to do is imagine that you're trapped with me in an elevator, and it just so happens that I'm also a Bitcoin maximalist, so don't worry. We have 10 floors to go down and around a minute. And you've got 1 minute to convince me as to why money on chain is something I should be interested in. Go.
Oh, that is an easy one. There is a huge problem in Latin America. There are people that need a stable coin because people in Argentina and Venezuela are not allowed to buy US dollars. So what money on chain enables is a solution for all that people, and at the same time a way for you as a Bitcoin holder to earn money helping that people.
Okay, nice. So I heard earn money and I heard helping people, two things that I quite like. So I'm in. So Max, tell me more. What exactly is money on chain? And why? I'm kind of excited about it already, but what is it? How does it work? And how can people use it to their advantage?
Money on chain is a battery of protocols. I think that the most important or the most visible is the Stablecoin Protocol. The Stablecoin Protocol has 3 tokens. The dollar on chain, that is a token pegged to a US dollar that has a few differences against other stablecoins. The first one is that the collateral is Bitcoin and only Bitcoin. The second one is that you are allowed to destroy your dollar on chain against the smart contract. You don't have to depend on a secondary market or someone buying your dollar on chain. You can interact directly with the smart contract if you have dollar on chain, and you can destroy your dollar on chain and get the same amount of Bitcoin. And the third important difference is that the peg is warranted by the smart contract. The dollar on chain is always $1. You can always go to the smart contract and redeem or mint your dollar on chain at exactly $1 in Bitcoin. Then we have the second token, that is the second that I like more, that is called BPRO. The BPRO is a token meant for Bitcoin holders. The BitPro is the token that get away the volatility from the dollar on chain And then the Bpro sells that volatility to a third token that is called Btcx. So the Bpro earns a little bit of free leverage that comes from the dollar on chain. The Bpro also gets some interest rate paid by the Btcx when the Btcx buy that leverage from the Bpro.
Yep.
And it also earns some of the platform fees. And on top of all that, the Bpro gets MOC tokens also, that is the governance token. The third token of the stablecoin protocol is the Btcx. The Btcx is a 2x position, a 2x long position in the price of Bitcoins. It's a high risk token. That means that when the price of Bitcoins goes up $1, the Btcx goes up $2. But when the price of Bitcoins goes down $1, the Btcx also goes down $2. That means that in a 50% drops, the Btcx will get liquidated.
Yeah.
Then we have a fourth token that is the MOC token, that is the governance token.
So you have 4 separate tokens inside the ecosystem, and am I right in thinking that the user can choose how to interact with those tokens, or that they are all one and part of the same system?
Yes, they are all part of the same system. You can mint and redeem dollar on chain Bpro on Btcx interacted with the smart contract. You cannot mint or redeem MOC token, but the MOC token is used to govern the protocol, and you can use it to pay fees with a discount also. On top of the stablecoin protocol, we also have a decentralized Oracle protocol. We feel that oracles are a very, very important point. When we start this project, we didn't plan to develop decentralized oracles. We thought, well, there are a couple of projects working on oracles. We are going to use someone else's solution. But at the end of the day, the other solution wasn't good enough. So we had to develop our own truly decentralized oracle. So why the oracle is important? Because the oracle is what fits the price to the protocol. So when you mint dollar on chain or when you redeem dollar on chain, the price is taken from the oracle. So if you have someone controlling the oracles, you have a complete centralized protocol.
Okay. It's quite sorry. It's quite a complicated system, but I think participation in it would probably explain it a little bit better to people. But what I'm catching is that, for example, if we break it into like a really basic format, if I'm holding a large chunk of Bitcoin, which is fundamentally quite useless in terms of being able to do anything with it other than hodl it or perhaps stake it on a decentralized exchange for a percentage, what you're offering is a way to leverage my Bitcoin position and trade against it fundamentally, so I can actually get some utility for my Bitcoin. Is that about right?
Yes, when you are holding, if you are a Bitcoin holder, if you are a long-term Bitcoin holder, it makes a lot of sense to have some of those Bitcoins in Bpro. And yes, you are getting a little bit of leverage. The leverage is very small because the idea behind the Bpro is that it's a very solid token. The idea is that you don't have to worry about if the Bpro is going to be liquidated. The idea is that the Bpro won't ever be liquidated. So yes, you are leveraging a little bit in Bpro, and on top of that, you are getting passive income also because you are getting interest rate paid by Btcx, and you are getting fees paid by people interacted with the protocol, and on top of that, you are getting MOC token also.
Got it. Okay, now it makes good sense to me actually. And how did you come up with this idea of? Because it doesn't seem like the most logical step to make to collateralize Bitcoin. How did you come up with this idea? Was it just you on your own, or was it like is there a whole gang of you? Can you explain a little bit more about that?
Oh yes, I think like I walk like 1,000 miles around the dinner table in my house. especially on midnights. And then I come up with an idea. So I start working with Alejandro Boxer, who is the third founder, to validate that idea. Actually, the original idea has changed a lot.
I
We
thought, yeah.
try and simulate, I don't know how many protocols, but we are like a year working on paper, refining the protocol.
Because 2 years have gone by already since the deployment, the first deployment. How would you summarize those 2 years, other than walking around your dining table at a steady pace? How's it gone over those 2 years? Has it been successful? How would you summarize it?
Oh, yes, I summarize it like a complete success. We launched the Stablecoin Protocol on December 2019. And immediately after we deployed the Stablecoin Protocol, we started working on the Oracle protocols, the governance protocol, a decentralized exchange that we built that is different than the typical Uniswap. Another protocol that we call Mockflow, that is a protocol that handles the fees and all the revenue inside the protocol. So these 2 years has been very, 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 very busy. We finished all that work around the main protocol, I guess, like 1 or 2 months ago. And now we are working on the next version of the stablecoin protocol that we think we are going to launch in a year. The next version has everything that this version has, but has a wonderful new features. For example, it will be multi-peg. You will have dollar on chain and euro on chain and gold on chain and whatever you want.
Nice. Okay. So you move it. Okay, so that's the direction it's moving into. I mean, we spoke briefly at the beginning about RSK, and I think RSK is perhaps a blockchain that many people don't know much about. And I know you don't represent RSK, but because you're operating there, I'm sure you know an awful lot about RSK. So can you tell the listeners a little bit, like, why did you deploy on RSK?
Well, first of all, the fit with Bitcoin and the security of the network. The idea of RSK is that the Bitcoin miners are the same miners securing the RSK network. There is a positive effect because the transaction in RSK subsidize the mining of Bitcoin. And the mining of Bitcoin subsidize the security on RSK. So that is a very important aspect of why we have choose RSK. But there is more. When we started working, there were no WBTC. So the only way that you had to, in order to implement smart contract that uses Bitcoin as collateral, the only way was doing it on RSK. But you can ask me today, why don't you move to Ethereum? Well,
that's what I was going to ask. That was kind of my next question. Like, is it actually possible to deploy money on chain on another network, or was RSK just like the first opportunity that you had?
Yes, but there is more. The thing is that RBTC is more decentralized than WBTC. WBTC is completely centralized. Okay, everybody trusts BitGo, there are serious, WBTC is great, but RBTC is much more decentralized and they are working in the full decentralizing solution. So that is why we are still on RSK and we are betting on the long term on RSK. Regarding if we can deploy the protocol in other networks, of course we can deploy the protocol in other networks. Actually, we are working in deploying the protocol right now in other networks, but as a different project. For example, if we decide to go to Binance Change, we are going to deploy in Binance Chains using BNB as collateral, not Bitcoin, because the best way to have Bitcoin as collateral is using RSK. The most secure and the most decentralized way.
Okay, so this actually working from RSK first gives you a launch pad to go out and integrate with other platforms, but use their native token, but still create the same economic setup there that you have on money on chain. That's really interesting.
Exactly, but the public will be different. If I have to give a solution to an Argentinian, of course that solution will be the dollar on chain backed with Bitcoin. But if someone playing with DeFi on Binance chains wants to use our protocol to have a stable coin using BNB as collateral, that's okay. But I think if I have to give a solution to a country like Argentina or Venezuela, that solution will use Bitcoin as collateral. That is a no-brainer.
It makes absolute sense. I mean, you've mentioned South America a couple of times now, Max, and I just want to let everybody understand why a little bit. So tell people why South America is important to you and why you've become a bit of an ambassador for Bitcoin in that part of the world.
Well, I am Argentinian. I am in Argentina right now. I live in Uruguay, but right now I am in Argentina.
Okay.
So
Nice.
I suffer inflation all my life. My father lost his entire life saving 3 times in his life. The government seized my whole savings when I was like 23 years old, and not only mine, everybody in Argentina. So I understand this problem very, very, very well.
That's really, really interesting, and I think and when you talk about the solution as well, like, so just to be clear on this, people in Brazil and Argentina, they can't get their hands on dollars. What's the situation there? So you mentioned it earlier, but just to clear that up.
Oh, it's Venezuela and Argentina. I think in Brazil you can buy dollars. There is no problem. But in Argentina, you are not allowed to buy US dollars. You have to go to the black market. So it's a real problem. If you have a business, you see every month how your money is devaluated in your bank account. Buying stablecoin in Argentina is not against the law. So this is a wonderful solution for Argentinians.
Got it. That's amazing. You know, one of the really strong reasons I love to do these podcasts is because sometimes you learn about protocols, you learn about projects, and it's all very face value, you know, read only kind of stuff. And then when you start to meet the people involved in the project, you start to understand more what their motivations are for doing things. Your motivations are very clear, and I think it's really admirable, and you've explained it really well. So I hope other people in the audience kind of feel that love, that you get to understand more deeply why people are doing what they're doing. It's not always just about money, and it's not always just about fame. Sometimes there's real reasons, and hearing Max's tale there of losing his life savings, it makes perfect sense why you would then come and try and change the game slightly. So I just took a quick look while you were talking there, Max, sorry. BPRO historical performance is nearly 30% over Bitcoin historically. How have you achieved that? What factors are contributing to
that? The biggest fact contributing to that performance is the performance of Bitcoin. The idea behind BitPro is that the idea behind the mathematical model is that the inflation of the US dollar is bigger than the inflation in Bitcoin. If that is true, the BitPro will continue to earn money forever. The most important factor regarding the astonishing performance that the BitPro has achieved is the price of Bitcoin going up.
Yeah, got it. That makes sense to me. I think something we keep talking about as well, Max, is inflation. I just want to make sure that everybody again understands what we're discussing with inflation on a basic level. When we talk about inflation, we're talking about the power of your fiat money fundamentally. So the power of a dollar, the power of a pound, what can it buy you in the real world? And as the value fundamentally is slipping, a pound or a dollar is getting you less than what it used to. Therefore, your fiat money is becoming less valuable. I just wanted to outline that because it's a word that I'm hearing almost daily at the moment. So just to make sure everybody's clear on what's going on. I'm going to take a couple of questions, Max. We've got a couple of people who've been patiently waiting. Hopefully they're still there. Let me get these two guys up on the stage. Okay. Lazarus.
Hello.
Hello. We can hear you.
Hola, Max. Hello, Ian. Max. My answer is for Max. ¿Cómo cambiarías con Money on Chain la estética de Ethereum?
No entendí la pregunta, perdóname. I didn't get the question.
Sí, mira, in Spanish.
Lazarus, it's very hard to hear you. It's very difficult to hear you right now. Can you?
Sí, la pregunta era, Max, con Money on Chain, porque aquí pone DappRadar por Money on Chain, sería, ¿cómo puedes ayudar a DappRadar con Money on Chain?
¿Cómo podemos ayudar a DappRadar con Money on Chain?
Por ejemplo, sí. Sí, correcto. Max.
Oh, okay. So the question is how Money on Chain can help DappRadar.
Okay.
I honestly I have no clue.
No, that's not. Yeah. DappRadar is a listing website for dApps. If anything, we are probably helping Money on Chain by listing them on DappRadar, and lots of people are getting visibility of Money on Chain due to that. Yeah, Max, I'd be with you, man. I don't think that Money on Chain can directly help DappRadar in any certain way. Maybe we can have a think about that. You keep walking around your dinner table. I'll hit you up next week about that one, all right? Thank you, Lazarus. 1 second. Okay, so we've got Lord Zelkova. Are you there?
Yeah, I'm here.
There he is. Shoot, man, what's your question?
All right. My first question is, I was wondering, just because we show a lot of cross-chain applications, I was wondering, are we going cross-chain?
Oh, actually, you can transfer dollar on chain from RSK to Ethereum right now. So I guess as soon as the total value locked in the protocol increases and the number of users increases enough, we are going to see dollar on chain moving in other networks also.
All right. Nice one, man. Good question. Okay, I'm going to just shift back over. I've got a few more questions, and then I've invited another chat. Oh, there he is. Prax, are you there?
Yes.
He is. Go for it, sir.
So I just wanted to, since he's in Argentina, by way of Argentina, is he familiar with the fact that Strike was made available there, and everybody knows about the Strike Act? In Argentina.
I didn't get the question, but I heard the word strike. So I think you are asking me about strike in Argentina. Is that correct?
Yes.
Well, yesterday, a few Bitcoiners were discussing in a private channel exactly about that. They don't see that strike in Argentina is a solution. The problem is that you use the account in Strike is based, apparently, I never use Strike, but apparently the Strike application is nominated in US dollar. So you can use Bitcoin to enter the Strike app and to cash out the Strike app. But inside the application, you have US dollars. So it's like the other way around. I agree with those Bitcoiners yesterday discussing about Strike. We don't see that Strike is going to help Argentinians. We don't see how. What Argentinians need is something different. They need a way to move pesos to a stable coin, or move pesos to crypto, to Bitcoin, not crypto, Bitcoin. So we don't see Strike being very successful in Argentina, and we don't see how the people in Argentina can be benefited by Strike.
Good question. I think we could probably spend an entire hour talking about South America and Bitcoin. In all honesty, I think, Max, couldn't we? But let's keep going with the question. So I just wanted to ask you to break down kind of how the money on chain model works, so that somebody out there who's perhaps sitting on a long-term hold of Bitcoin can get a better idea of how to jump in and get involved. So how does the model work?
Well, we can use a very, very easy example to see exactly how the model works. So let's suppose I am that you are a Bitcoin holder. Do the math simple. Let's suppose that each Bitcoin costs $1. So you are holding 100 Bitcoins. So for simplicity, we are going to suppose that the protocol is completely empty. There are no one using the protocol. You will be the first one using the protocol. So you came to the protocol and you put your 100 Bitcoins inside the protocol. So the protocol will give you 100 BPRO. And now the price of 1 BPRO is exactly 1 Bitcoin. So 2 minutes after you, I came up to the protocol and I send, let's say, 25 Bitcoins to the protocol because I want dollar on chain. And since the Bitcoin is $1, I will get 25 on chain. So now inside the protocol there are 125 Bitcoins. You are holding 100 BPRO and I am holding $25 on chain. The time goes by and now it's tomorrow, and now the price of 1 Bitcoin is $2. So I'm holding $25 on chain. So if I return my $25 on chain to the protocol, I will get 12.5 Bitcoin. And when I bought my $25 on chain, I put 25 Bitcoin. So those 12.5 Bitcoin that I left inside the protocol now are yours. Now you are not holding, you are still holding 100 BPRO, but now your 100 BPRO worth 125 Bitcoin. That is basically the basic behind the protocol. In the long term, since the price of Bitcoins will appreciate against dollar on chain, the BPRO will always worth more.
Okay, thank you for that. That makes a lot of sense. And as I said at the beginning, it's quite complicated, but once broken down, it actually does make a lot of sense and is quite simple, actually. Okay, thank you for that, Max.
One thing that I want to be very clear is that the BPRO is a token meant for long-term holders. The BitPro has a negative return in the short term in Bitcoin. For example, if you bought BitPro when the price of Bitcoin was 60,000, today you are holding the same amount of BitPro, but you are probably holding less Bitcoins. But in the long term, your BitPro will appreciate against Bitcoin.
And is that to sort of ward off day traders and those looking to make a fast buck? You're not interested in those customers, right? That's not what this platform is for, right?
Exactly. Oh, well, kind of. If you are a trader, you are probably interested in the Btcx instead of the BPRO.
Got it. Makes sense. Okay, cool. That makes a lot of sense, and I think if people are keen to explore, then I think a bit of trial and error is probably the best way to come to fully understand it. But one of the key elements, having a governance token, which you've mentioned you have, is usability. And a lot of projects launch with a governance token, which in practical, like kind of day-to-day life, is basically useless. What's the case with the MOC token? What can MOC holders do with it? Like, can they? Yeah, like explain a little bit, because it's a big trend we're seeing where there's not much utility. So what can they do?
Oh, today you can pay fees with the MOC token
On the platform,
or you
right?
can the platform, right? Or you
Yep.
can stake your MOC token to earn the revenue generated by the protocol and to vote for protocol upgrades.
Okay. And is there anything sort of in the pipeline for the future that people should be getting excited about to do with that token? Or is it kind of set in stone for the time being?
No, we don't want to. Let's be clear. MOC token is not a currency. So the MOC token, we don't think that the MOC token will have more uses in the future. The idea is that you are going to use the MOC token to govern the platform and
Yep.
to pay fees. There is another use for the MOC token that if you have enough MOC token, you can compete. And if you are in the top 10 of MOC token stakers, you have the privilege to become an oracle and a prize feeder for the oracle. So you will earn more MOC tokens for being an oracle.
Okay. So it has utility. It absolutely has utility, and it has earning potential. That's really good. But deep, like one of the common threads of our chat has been decentralization, Max. You've mentioned decentralization a number of times, and I'm sure that most people listening truly understand what that means against centralization. But it's really quite obvious that you guys are working towards true decentralization as your main goal ever since kind of setting this whole project up. And like, could you tell us like how decentralized are you like today? Give us a clue as to how decentralized your platform actually is.
Well, it's almost completely decentralized, but the reality is that it's full centralized. And why I am saying this? Because all the mechanisms for fully decentralization are already implemented, are already coded and implemented. But we still have a backdoor. We think we are going to have this backdoor for 2 or 3 months. We are not sure, maybe more. Once the community feels comfortable enough to turn off that backdoor, they can vote on that, and the protocol will become 100% decentralized. So everything is set. We just have to push the button.
Okay, makes sense. I'm going to move to a question from Franco, who's waiting patiently. Are you there, Franco?
Buenos días, qué pena, puedo hablar en español, ¿cierto?
Sí, claro.
Can we please, if
yo tengo
possible,
una pregunta.
Franco, if possible, can you keep it in English so that the other people can understand, and that when we put this out as a podcast later, everybody understands what's happening? Is it possible?
Oh, Ian, I will translate his.
Okay, thank you, Matt. Perfect, thank you. Go ahead, Franco.
Ok, me trajo. Listo, sí, es que en español me expreso mejor, qué pena. Pero la pregunta es la siguiente: ¿cómo hago yo para pagar? O sea, ¿qué puentes puedo utilizar yo o qué bridges puedo utilizar yo para pasar los tokens, digamos, de la red de Ethereum a la red de RSK, a la red, al network de Money on Chain? ¿Qué puentes puedo utilizar o cómo hago para pasar los tokens de una red a otra?
He's asking how to pass tokens from RSK to Ethereum and from Ethereum to RSK. Well,
Okay.
let me Google that for you. You have to go to tokenbridge.rsk.com, .co. Tokenbridge .rsk.co. And there you have the token bridge to move tokens from RSK to Ethereum and vice versa.
Nice. Cool. Thank you for translating as well, Max. That's much appreciated. So just to go back to, we were talking about decentralization and why it's important. And some of us are just like, yeah, obviously it's important, but why is it important? Why is decentralization so important in this field of what we're trying to do here? What's your opinion?
I love that question because if you achieve truly decentralization, then your project becomes unstoppable.
That's a great answer, actually. When it's run by the community of people who sit behind it, nothing can stop it, nothing can pause it, nothing can halt it. But why is it so important? But we're seeing so much. One thing I would say is that in the future, maybe not the too distant future, we who sit on this side of the fence often talk about decentralization being the end goal and that's where we want to get to. But what we also see is that consumers, users, they may not care that much. And I think one question is, how can we educate people more on why decentralization is important and why they should care? Not just kind of explaining the differences between central and decentralized, but why should people care, Max? Hit us.
That is a very, very, very interesting question. The thing is, people won't care about decentralization. Well, some people will care. We care about decentralization, but most of the people won't care about decentralization. And that doesn't matter because we have different layers. We have Bitcoin completely, absolutely decentralized on layer 1. Then we have RSK that is almost completely decentralized on layer 2. Then we have money on chain that will become completely decentralized in the next few weeks or months. And on top of that, you can start building centralized solution. And because now users can choose. The whole financial 2.0 ecosystem is built on decentralized basis. It's not the same to have it doesn't matter if I use a centralized application to buy for a movie ticket. I will have probably $50 in the wallet. It doesn't matter. But what matters that nobody controls the money. What matters is that Bitcoin is decentralized. What matters is that RSK is decentralized. What matters is that money on chain is decentralized. On top of that, of course, you can have decentralized wallets and decentralized payment system for Bitcoiners and for people like us. But on top of that, you can build also completely centralized solution for everybody, and you are still having how do you say that you cannot deflate? You still have Bitcoin without inflation. You still have RSK with money on chain that are holding smart contracts that are going to keep the promise because nobody can break the promise.
Yeah, it's a really strong point. And the point about community participation you made at the beginning, I think, is important. It's something that's important for DappRadar as well right now with the launch of Radar. And the community are the people who help to grow. We're not trying to close doors here. And I think some people are quite surprised by this sort of outlook on the industry, that we have to build this together, because without everybody doing it, we won't get to where we need to be. And I think, Max, for you personally, and correct me if I'm wrong, but some of us here may not know the downfalls of when money is controlled centrally and inflation hits hard and savings are taken from banks. Can you just go into that a little bit more in the situation in Argentina? Just give people an idea of why decentralizing the money flow is a good idea compared to perhaps what has been happening in Argentina.
Yes, of course I can. in Argentina, the situation is two kind of people. You have people with no savings at all, that are earning money in pesos, and the pesos has an inflation of 50% a year. So that people is becoming every day poorer and poorer and poorer. And then you have another class, a higher class of people that are professionals, medics, engineers, that most of them has been saving dollars for all his life, because they cannot trust the Argentinian government, but they trust the US government. But now there is inflation in their savings. There is a huge inflation in their savings. So the situation in Argentina is critical. So imagine if those people, instead of trusting the Argentinian people, of trusting their savings in the US government, been saving in something like the US dollar, but cannot deflate.
Yeah.
That is so important. Bitcoin is so important for humanity. Most people in Europe and United States doesn't understand this point of view, because they have a history of governance that you can trust. But that can change from one day for another day, and for the next day, and you can have the US dollar devaluated by 50% in a year. I understand, I know that this seems unthinkable for most people in the United States. But remember Lehman Brothers?
Yeah. It does feel unthinkable for most people that I speak to, but it feels like it's getting closer, in my opinion, and it could happen pretty soon.
Exactly.
I think it's like, also you mentioned something there as well, like in Europe we have governments that we trust and we rely on, and we have this sense of security there. I think perhaps right now is a pivotal moment in history where these feelings are starting to alter slightly, perhaps, and we're not in the same situation as you guys, but people are starting to ask questions and are starting to think a bit more deeply. So it's really it's a big point, like that digitalization of currency could lead us to the next stage of evolution. It's a big statement, but I think, Max, you probably agree with me, right?
Of course, absolutely.
That's the way it's going to be. But anyway, let's get back to money on chain. And obviously you guys have been working hard for the last couple of years. You've delivered on promises and you've given to your community. But what's coming in the future, Max? Like, why all those footsteps around the table? What you've been planning? What's on the roadmap for 2022?
Growth. Now the roadmap. Well, I already told you that we are building the next version of the protocol, but I think that the focus of money on chain right now should switch from building to growing. We finished, as I told you, maybe 1 or 2 months ago. We have a complete protocol and a robust protocol, and now our focus should be in telling the people, hey, look what we have built.
What kind of plans? Have you got any specific plans for that? You know, because we're talking about marketing, we're talking about awareness, like anything in the pipeline that's going to put you guys on.
We are not planning to make a lot of marketing. Our focus right now is to show the platform to all G Bitcoiners. Those names that you see every day on Twitter and you follow like 5 years ago, we are talking to them and showing them the protocol.
Got it. So you're after those old school Bitcoin maximalists that people like Richard Hart, other people like that. Okay, nice.
Exactly, because money on chain is like a base protocol. It's not a product for the end user. It's more like it's more like the MP3. So
Yeah.
now there are tools that needs to be built on top of money on chain to reach the general public. We do not plan to build things on top of money on chain. We want to focus on money on chain. So we need the rest of the ecosystem to know the protocol to start building things on top of money on chain.
Got it. So you've got your foundation, and now it's perhaps time to roll out some user-facing services so that people can start interacting. Which kind of leads. I mean, are you open, and are you, and have you been open to the idea of like institutional money coming into money on chain, and like big companies and fund managers actually using it? Is it set up for that, or can it not deal with that?
Yes, actually, we are talking with fund managers that are big names in the industry that are looking money on chain and are interested in the BitPro.
Got it. Interesting. I think the whole project is super interesting as a whole. It's something that perhaps a lot of people don't really know about or understand in detail. So I think this podcast has been extremely helpful just to outline what it is money on chain is, how the model works, why Bitcoin long term. I think that's important. You've stated that a few times. This is not for people who are looking at, well, perhaps it is for people looking at day trading from a different angle, but this is for long-term Bitcoin holders to leverage their position over time. And Max has been pretty clear on that. So yeah, it's an important point to make. But yeah, that kind of leads us to the end for today, Max. I'm going to wrap things up, and I just want to thank you for your time, man. Like, what time is it in Argentina now, by the way? Sometimes people are in like 3 a.m.
It's almost 2 p.m.
Oh, okay, so you're doing all right. Fair enough. Good stuff. So thank you for your time today, Max. It's been great to talk to you, man. Like, I could literally feel like I could talk to you all day. I think it would be more about your home country and sort of the situation and things like that. It's fascinating to me. And yeah, I think we'll catch up with you again in maybe 6 months' time, 8 months' time, see where you're at, see where you've got to on the roadmap. And yeah, and just keep in touch, basically. Thank you once again. It's been a pleasure.
Thank you, Ian. The pleasure was mine.
No worries. All right, guys. And just for everybody listening out there, thank you very much for your questions. They're always appreciated. Some good ones out there, even if this host can't understand them all that well. Max did a good job for me. Yeah, I just want to thank you all for showing up, basically. We're here tomorrow as well. We've got the what's happening tomorrow is we've got another AMA with Pedro Modesta, our lead analyst over at DappRadar. They're going to be going through the latest user behavior report. What we do there is track user behavior through the blockchain, see what dApps people are utilizing the most and which categories are kind of trending right now. So it's good information for the year ahead. That's happening at 4 o'clock UTC time tomorrow. So once again, thank you, everybody. Thank you to Cornelia, who's out there in the audience somewhere, always helping. Thank you so much. Thank you to Annika for filming everything. Sorry, for recording everything. And as I always say, next, if you miss any of the shows, you can grab them on YouTube. Everything's there for you. So once again, thank you, Max. It's been a pleasure. Thank you, everyone, for showing up. Oh, we've got a question, Max. Should we take it? Oh,
of course.
He's gone. He ran away. Oh, I scared him. We did have a question at the end, but he's ran away. No worries. Thanks a lot, Max. Yeah. And thank you for everyone for listening. All right. Take care.
Thank you, everybody. Bye.